Welcome to Drill on Earnings. We have quarterly results out from F5, a really interesting quarter from an important company. This is the business story behind one stock on the move. I'm Cory Johnson, Chief Market Strategist for Epistrophy Capital Research. We cover the 50 most important companies in technology. F5 out of Seattle is certainly one of those. Q2 2025 earnings, fiscal second quarter for these guys. They were expected to do about $720 million in revenues, $3.11 in earnings. They did better than that, $731 million in revenue. I think there's a lot of concerns that a lot of tech companies are going to miss numbers. These guys beating numbers, raising guidance. That's Wall Street junk. Who cares? We want to focus on the business much more than the miss or the beat or whatever. What we saw from this business is it's really turned around. They've got their growth locked in, 7% year-over-year revenue growth for this company. Well, it's a little bit off of last quarter. Still strong revenue growth, high single digits. Again, when you think of F5, it's a different company than it used to be. It used to be a company that really managed apps for companies. But in an AI data center era, it's a very different company. It's like the internet's bodyguard and pit crew and air traffic controller and I don't know, all rolled into one. They keep apps running fast and safe and balancing loads, blocking threats, cybersecurity threats, steering traffic into the right places at the right time, whether it's a little website or it's a global cloud empire. So they used to be known for their beefy hardware boxes, but really software and software from the cloud is the focus of this company. And it's very profitable. So one of the things we saw is operating margins keep getting better and better. While 2 years ago, just being above 10% was a good thing for these guys, 22% is actually down from an operating basis from where they were last quarter because of that focus on software. So systems are still there. Software and services, though, really the big business here. And when we think of the kind of services they offer now, here's an example. F5 AI Gateway. So it's again, coming from their background of managing apps and managing security, they're looking at AI and thinking of ways to prevent data leakage. That is, AI apps and queries that go in and suck data out of companies that the companies don't want to lose. They want to enforce policies as generative AI is happening using company data, reducing the risk of models doing weird things by controlling the data. Really interesting, challenging stuff, and something they're really set up in a good position to be doing. And one of the ways they're able to do that is the continual success they've had with recurring revenues. 72% of revenues are recurring for this company. It means that they can focus on new products because they've got that really steady background of recurring revenues. And also their licensed business, their old business is kind of going out and selling little chunks of software, not as important as their subscription business. Again, which means they can really focus on innovation and new sales. So how did the stock react when the numbers came out and the guidance came up? It was up initially a big chunk. During the conference call, sold off a little bit, but 1% in after hours trading, pretty good because it's 46% on the year. Compare that to the S&P 500 of just 8%. Real turnaround up there at F5. The CEO, someone we like, François Locoh-Donou, talked about the big drivers of growth and how AI is kind of interwoven into that. Here's what he had to say about the things that are really driving the strength they're seeing in systems demand.
Ranking the drivers of the strength we're seeing in systems demand, I would say that tech refresh is the number one driver today of that demand. I would probably put, DC modernization and expansion, but it's really these hybrid multi-cloud architectures as really number two in what we're seeing in the strength in demand. Now that we believe includes customers also getting ready for AI, so you consider there's an element of AI that is into that, but it's a broader theme than just AI. It's data center modernization and capacity expansion. Third would be competitive displacement. And fourth would be AI, would be the ranking, meaning by that direct AI use cases that we are winning today. So that would be the ranking that I would put to that. But overall, we're seeing refresh motion very strong and significant tailwinds as well that are building up and hopefully will grow over the next several quarters.
All right, but what's it all mean? What's your big drill on earnings takeaway about F5 earnings? Well, I've got that. So F5, Q2 2025 earnings, second fiscal quarter for this company. Really strong quarter for these guys. $731 million in revenues, up 7% on a year-over-year basis. That growth is really locked in for this company. We've seen it a few quarters in a row right now. And they're having great success securing and optimizing the flow of digital traffic, especially leveraging AI to to do so with stuff like their F5 AI gateway, which is one of their new hot products, which is doing quite well for the company. But I told you, if you drill down earnings bite, the one number that tells you a whole lot, that number for them is 3%. It's not a sexy growth number, but they've had steady single digit, mid-single digit, and now 3% growth in their largest business, which is their services business, giving them the foundation to grow the rest of F5. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson.